Good afternoon, everyone. Thank you very much for joining the last panel of today, particularly focused on the industrial reality of decarbonisation. And clearly, we've got a lot of technology available today, and a lot of funding and enthusiasm in deploying those technologies, but we're not achieving the scale of decarbonisation that we're seeking to achieve in line with the Paris Agreement and to change course as a global economy. So today we're going to explore where those challenges are. We're going to focus on some of the technological issues as well as some of the commercial challenges that are perhaps stopping us from achieving everything that we could. Um, and I'm really glad to say that I'm joined here today by four panelists, and I'll give them an opportunity to introduce themselves. Michelle, would you like to start?
Hi, everyone. I'm Michelle from the Singapore Economic Development Board. We are the main government agency in Singapore that oversees the manufacturing as well as exportable services sector. So that's probably about 30% of the country's GDP. That said, while it's 30% of GDP, the industries actually cover more than 60% of the country's emissions. Because of that, which then is a segue into what I do. So I cover sustainability within the EDB. And one of the main focus is really how do we identify pathways as well as R&D focal areas to support companies to decarbonize their own emissions. And of course, the other second focus area for me is to how do we support green growth, particularly as we think about decarbonization, how do we turn that into an economic opportunity to support climate tech startups and companies to scale and anchor new green growth opportunities in Singapore.
Okay, good afternoon, everyone. My name's Freddie Barnes. I'm Deputy General Manager and Sustainability Lead for Sumitomo Corporation in Europe, part of our Steel Group. My work has focused over the last 12 years at the intersection between commercial, supply chain, and sustainability and decarbonization. Sumitomo Corporation is a traditional Japanese investment and trading company with roots going back over 400 years to the Beshi copper mine in Japan. Today, we're an incredibly diverse business operating across all sectors of the economy, from renewable energy generation, like right here in the UK. We built the Galliper wind farm back in 2014, through to banana trading. We own a company called Fifes, and into our steel business. We supply millions of tons of steel to the energy and automotive industries every year. Looking forward to the discussion. Thank you very much.
So, hello and good afternoon, everyone. My name is Sabine Kutznick. I'm head of sustainability governance at Evonik. Evonik is a chemical company, and we have around 30,000 employees. We produce about 9,000 different products at around 100 sites. So it's quite a complexity we are managing and to advance towards sustainability. And therefore, I'm also looking forward to discuss the chances, but also the challenges we have in this transformation.
Hi, everyone. Last but certainly not least, I'm Thomas Panton. I'm one of the investors at Endgame Capital, an early stage climate tech venture capital fund based in Europe, investing across Europe and North America. We look for companies which are kind of TRL5 onwards, and something we call climate denier proof. So these are startups which win on their business metrics first. They, of course, have huge decarbonisation impact, but they don't rely on that to be able to sell their product. So even climate deniers would buy their solutions. Looking forward to the discussion. Thank you, everyone, and thank you for joining. And just to complete the set, I'm James Dennis. I'm head of industrial sustainability for industrial manufacturing defence at KPMG. And so we're going to run this as a moderated discussion. So we're not going to have any time, unfortunately, within the hour to go to Q&A. But if you do have any questions, please hang on to those and bring them forward at the end as our panelists will be sticking around to take those. So let's start with where the opportunities are. So I'm going to open the discussion with a question on where the key technologies are to unlocking industrial decarbonisation at the moment. And maybe Thomas, if I can come to you first with your views on that. Yeah, it's a great question. Now, I think that, of course, all sectors need to decarbonise. You could look for opportunities in all of those areas. I think fundamentally, one of the things that's been clear across climate tech innovation and decarbonisation innovation over the last kind of decade or decade and a half has primarily been that we've invested a lot of capital into stuff which hasn't commercialized and scaled well. And then the investors who invested into them are now wary of doing the same thing in the same cycle again and again and again. And actually, what that means is that in almost all cases, without pinpointing necessarily specific examples, what you need to be looking for is stuff which can really lay out a successful commercial roadmap to the point where they can scale without having to rely on consistent high capex investment again and again and again. I think that when that comes to kind of industrial carbonization, one of the clearest ways that we see that is through the automation and efficiency of manufacturing of high intensity industries or hard to abate industries like steel manufacturing or cement manufacturing. But also just looking at the way in which we use energy, the efficiency of using energy, the way that that energy is then dissipated, whether we can then use that heat to come back to energy. Lots of different ways around that, which I think are really exciting ways to think about commercial opportunity within decarbonisation tech. The other thing that's really important here is obviously right at the earliest days of R&D, you've got people looking at new solutions which have not ever been used before. And I think the risk here, and a lot of the time, is that we get excited by the potential of the decarbonisation impact, but we often don't think about whether this can actually become a business, similar to my first point, but more in that R&D phase. And I think it's at the responsibility of research institutions, investors, early stage investors like us, to really be highlighting and prioritizing to those inventors and to those researchers and academics and startup founders, and even the kind of people bringing those people around the table, that actually, if you want the traditional venture capital model to succeed for new innovation within decarbonisation, you need to be thinking, even in those earliest stages, about whether this is a good business first and foremost, not just a great kind of impact project.
100%. And I don't think that's just limited to VC either. I think that's consistent across the whole corporate landscape around bringing the commercial case for decarbonisation.
I totally agree with this. And I think a really, really brilliant example of this is that it's relatively easy. I mean, I won't say easy, but for early stage startups to find pilots and kind of trials of their product. And that works very well all the way from not very good business opportunities all the way up to very good business opportunities. But what you can tell is that for these big corporates that do these pilots, they often drop off once it gets to kind of the commercial conversation. And actually, what we're seeing now is that those companies which have come to those pilots with a business proposition, not just an impact proposition, are the ones that then progress from pilot and out of that kind of pilot purgatory into actual commercial takeoff agreements. And that's what's very exciting in the kind of industrial space.
And Freddie, this is something we were discussing earlier in the day around the need to progress those projects beyond that sort of critical phase, getting out of the lab and into industry. Give us some views from your experience on that.
Of course. So I think from my perspective, the steel industry is one of the most important industries to decarbonize. We produce around 1.9 billion tons of steel per year as a society, and that accounts for around 7% of total CO2 emissions every single year. The steel industry as a whole can be split into two categories. You've got your primary steel production, predominantly produced through a blast furnace, and then you've got your secondary steel production, which is basically recycling of scrap steel. If we take the scrap steel industry, they use what's called an electric arc furnace, and decarbonization of this process is relatively straightforward. You just need to transform your electricity supply from fossil fuel to renewables. And of course, there's huge challenges around renewable build out, and there's a lot of competition for renewable electricity today, particularly from the likes of data centers. But the technological development is really needed in the blast furnace space. And if you look at the blast furnace, what you're trying to do is change a chemical process that is incredibly efficient and has been operating for hundreds of years. And so essentially what you're trying to do is remove the use of carbon as the reducing agent of taking iron oxide and putting it to pure iron, and changing that carbon reducing agent to something else that doesn't produce CO2 as a byproduct. And so the most likely option and the most developed option today is using hydrogen to do that process. And that has the nice byproduct of water instead of CO2. But there lies a technological challenge, because this process itself is incredibly different to the existing process. And there's a lot of development and technology that's being put in place today to helpfully allow that to be industrialized and scaled across the global steel production. And I'll go into a bit more detail later, but that's the key technological development in steel.
That sounds good. And Sabina, how does that translate into the chemicals industry?
Yeah, for the chemicals industry, we had the opportunity to not only look at our own processes, but also to see what's basically down the value chain, and to help our customers also to decarbonize. And there is, for example, one really nice example with a new plant in Singapore, which we just opened last year. And this is, for example, producing a catalyst. It's called alkoxide, and this is used for the biodiesel production. And it's also a region for region approach. So our customers are located in Indonesia and in Malaysia, so in the region there. Plus, this catalyst, we see also a potential for further innovation with regards to recycling. So, recycling plastic waste. So, we are also putting innovation into that field.
Amazing. And that's a nice segue there into Singapore as well, Michelle. If you'd like to share a little bit about the opportunities that you're already pursuing in Singapore around the industrial decarbonisation, the particular technologies that you see relevant.
Yeah, I mean, I'm going to look at this from a macro perspective, given that I mentioned that 60% of Singapore's emissions come from the industry, of which a majority is actually from the energy and chemicals sector. I think Sabine briefly alluded to that because of Evonik and then Evonik's presence on Jurong Island. Three broad technological areas that we are looking at. One definitely is from a carbon capture, and this is more specifically on a point source capture. Singapore has a very high humidity, and because of the concentration and profile of companies there, a lot of them require point source as well as a lower concentration carbon emission streams. So for that, we're targeting carbon capture technologies such as your novel metal oxide frameworks, membrane technologies that can certainly help to reduce costs of capture. Number two is certainly in carbon utilization. It's definitely a term that's popular in Europe as well. We want to see how we can reduce the cost as well as increase the efficiency of carbon utilization. And third, this one, I think it's unpopular, whether it's a popular thing. With Frederick, we're certainly aligned when it comes to hydrogen. However, I also understand in Europe that it's been trialed and tried quite often, and there seems to be a very aversion to it. However, in Singapore, because of the limitations in the various technological pathways, certainly open and betting on hydrogen. And given recent developments such as methane pyrolysis, even efficiencies in ammonia cracking, and even looking at your different hydrogen carriers as well, we are quite interested to see how we can develop more of such pathways in hydrogen.
So
Maybe I can add on to that because I think also in Europe there we see still the potential. However, there have been some drawbacks in the past. So maybe also some good news to share. At our last innovation conference just several weeks ago, we shared an example of the anion exchange membrane, where we really see the potential that can bring down the cost for hydrogen production. So it's an RD&I state, but still pushing forward and contributing to the path you just mentioned, Michelle.
So I think a theme there of carbon capture and hydrogen coming forward, amongst an array of other technologies, as is ever the case. But what's stopping some of these things from getting away? Obviously, we're not today sat on large amounts of carbon capture capacity, and we don't yet have hydrogen in the system at the right scale. So what is it? Is it a technical issue, or is it a commercial challenge to getting these things up to scale? And maybe Sabina, you want to continue the thread on that?
Yeah, it's actually the commercial case. I mean, you already elaborated on that and explained how it's working. So you really need to see how you can advance sustainability and competitiveness together. And for example, we see it a lot in Europe at the moment, that quite some chemical plants are decommissioned. And this is also when we look at the CO2 pricing schemes there. So we, for example, expect the price of CO2 of 130 euro per ton in Europe. However, in other regions, 37. So you see what the different political frameworks also in different regions of the world will do, because we produce products which most of them can be shipped. So basically, you're in a global competition, but you have to be prepared for the local schemes. And that will basically, in the end, lead to a shift in different areas for production. But like that, we don't get the CO2 emissions down in the first place because we don't work, let's say, on the decarbonization, but rather on a deindustrialization of one area and shifting it elsewhere where the conditions are more favorable for it.
And so do you think there are examples in there where there is strong taxation or the right mechanisms, the right commercial structures that, that can see this succeed? And is it a case of level setting against that, or are we still looking for an example of where we can make those economics work?
Oh, it really depends where you look. So when we, for example, look at the energy industry, we see that there the advancement is much faster. However, you use the energy also um, at the site, at the place where you are, at the region where you are. So you don't have this regional shifts easily in that area. So you really need to think about how you're designing the market mechanisms at the moment. Um, Plus also to think how can we create demand for products which have less CO2, because at the moment we also don't feel a high appetite when we look in the end consumer market in most parts of it. Of course, there are sections where the really customers ask for it, but it's not the vast majority who ask for that. And um, therefore, we really have to look at the market mechanisms and at the policy framework to make it work and to make sustainability and competitiveness, advance really together.
Could I touch on the cost element, because I think and the policy framework as well. I mean, in Europe, we're seeing good developments in this area. The Carbon Border Adjustment Mechanism (CBAM) has been put in place specifically to try and address these international product and service flows, trying to levelize the playing field for producers both in Europe and outside of Europe. And we really feel this in the steel industry because a lot of steel is imported from the likes of China, from Japan, from India into Europe. And so putting a price on the carbon, even though it is still relatively marginal on a percentage basis, is getting the conversation going in the right direction. And it is turning what usually a reporting basis of carbon emission counting and disclosures to more of there's a real cost impact today. And I think that's a really strong policy signal. Is it perfect? Absolutely not. And are the steel industry, are they tying themselves in not trying to comply with it? Absolutely. But still, the conversation's heading in the right direction and innovation is happening. Going back to your original point around the technical hurdles, specifically looking at steel, the big challenge is what we're moving from a chemical process that was exothermic, so it produces heat, to one that is endothermic. It takes in heat, and that has huge ramifications for the quality and the scaling of this technology. And in Japan, there's a lot of R&D going into producing and firming up the technology on an R&D scale. But to take that from like a 12-meter test blast furnace to a 2,500 cubic meter real blast furnace is a completely different story. And so we're right now, we're at that shift from R&D to scaling. But that is going to take years, not 1 or 2 years, but 5 to 10 years. And I think this is another challenge that we're facing.
Yeah, maybe just to bring a aspect of sort of like early stage climate tech startups on scaling as well. I think there's a couple of things which are kind of mentioned here. The first is around policy. I think I'm pretty blunt about the fact that policy is pretty fickle. We saw this with America being the prime example here, where Trump came in for his second administration and lots of the kind of like national policy that existed disappeared pretty quickly. And that is all, bad in itself, but actually that has other impacts, which I think people underestimate. A great example of this is asset management companies that operated primarily in America immediately became less interested in having sustainability targets, immediately became less interested in investing in areas which were driven by sustainability regulation because it just didn't matter to them. And I think that if you don't take that into account when you're thinking about global solutions, you actually risk kind of eliminating the ability to get money and access to these capital markets which exist on a broader level anyway. I mean, a great example is BlackRock in America got rid of quite a lot of their sustainability team pretty quickly once Trump came in again. The second thing I would just say is that one of the biggest things with scaling technology is sometimes not even the cost itself, but actually this ease of implementation. I think that a lot of time there's this expectation that, okay, yes, but once you spend X amount of capex and renovate your entire plant, it's going to save you money. It's like, okay, but I don't want to renovate my entire plant. To do all this, it's a massive ball ache. And I think that that is also something which a lot of startups don't take into account when they think about going from pilot into scalable commercial technology, is that going from a relatively small example of piloting into much larger sort of continuous flow manufacturing or solutions, it can sometimes be a massive change of the entire kind of not just on-site plant, but also the supply chain that exists around it as well. And I think before I came into venture capital and startups, I was actually at Greenpeace, which is the largest independent environmental organization in the world. And I was there for 4 years working on supply chains. And one of the biggest pushbacks often was literally price and ease of access. Like, if we can't do this easily, we don't really care if it's cheaper. We're not going to do it. And so I think that that is just one big thing that stops a lot of startups from scaling across industry as well.
Absolutely. And I think we've touched on the current policy landscape, but we also touched a little bit on the direction as well. And I think that consistency, and to your point around the US and the fickle nature, the important the important thing from an investor perspective, I think, is the direction that it's taking, and not only the signal today, but the signal that it's going to change further in that direction in the future.
I think maybe as well, just to very quickly touch on that point. I mean, the UK is a great example of this. It's pretty much certain that in our next election we'll end up with a pretty far right climate denier government, and I think that because of that reality that we exist in, we have to be aware that, okay, the UK isn't part of the EU anymore, but regardless, like, the EU can keep chugging on ahead, but the UK is a big part of just the European economic interest anyway. And if the UK itself is leading that charge in saying we don't believe and we're not going to have policy around this, it makes it very difficult for European governments themselves to remain like compelled and have conviction to continue doing it as well. So again, I just come back to that point that policy is quite fickle, and it's great to see things moving in the right direction in certain regions of the world. But a lot of the time, we're talking about geopolitical relations, which are impacted by the relations of your allies and the people you work with. And I think the UK is quite heavily influenced by the US, and the EU is quite heavily influenced by the UK. So you do see this trickle down of just like a knock on effect of political sentiment. And I think that particularly with the UK's kind of future political horizon, we also need to be aware that this is likely not something that's going to change quite rapidly here. It's actually going to be a little bit of time until we come with the boomerang back to people giving real care in government. I think that's something we should rightly be focused on and trying to change, but also adapt to in industry and in startup.
Big question, that one. So how do we do that, right? In the absence of that policy signal, in Europe, the UK, and the US,
Money.
money.
At a fundamental level, like, the world is run on a capitalist model of business. So right back to my very first point is that if you can build stuff which is attractive on a commercial level to both the incumbent industrial partners that you're looking to serve and the kind of investors that are likely to help you scale, then actually you're much more likely to be able to decarbonize, ironically. And I think that that was probably true even in the golden age of everyone caring. But now we're just at the point where a lot of kind of policy and investors are kind of just swung towards, well, if you're not that, then I'm not going to touch it. So fundamentally, it comes down to, look, we whether we love it or hate it, we do live in a system which is driven by the bottom line. And if you're having a positive impact on that bottom line, you're far more likely to scale the solution that you're bringing to market. And therefore, that's how you get round these flip-flopping policies, is that, well, I have a good business. And fundamentally, no matter what the policy is, my business will continue to make other businesses money or save them money. So therefore, it will continue to scale.
100%, and perhaps by demonstrating some of those earlier wins in that commercial context, then we can recruit some further support to go after those things that are maybe slightly harder to see or slightly longer horizon. But that moving away from the woes of the certainly the UK political situation, Michelle, in how does that translate to Singapore, and where you see the opportunity to get some of these projects away and address some of these challenges?
Yeah. I cannot help myself but just say this. Singapore is not fickle, right? We do have the conviction to decarbonize. Firstly, we are an alternative energy disadvantaged country. So it's going to be difficult given our land size. We do not have a huge land area for us to be planting wind turbines or solar panels. Don't have fast flowing rivers, and even though it's a sunny place like the UK today, it has lots of clouds, so it's very difficult for us to be generating solar energy. However, against all odds, this is a country with conviction. I heard the term cash being mentioned. So traditionally, as a government agency, we have been giving out grants and we've been supporting companies. However, when it comes to decarbonization, this is where we wanted to get serious this particular year. We will be, and we have been announcing this, we have set aside $800 million as part of this decarbonization grand challenge. Come October, there will be a greater focus and announcement around industrial decarbonization. And with that, we do want to really focus on two phases. The phase one is on the early stage R&D. For that, traditionally, just like the UK, a lot of money has gone into public sector research institutes. That will still continue. However, in this current phase of funding, and just like what has been mentioned, commercial acumen is really important. We wanted to flip this around and we said, hey, we're going to set aside some amount of money and support for startups as well as companies who want to do industry-directed funding in an early phase. How this works is that, if you're a startup, if you're a company, you have an R&D idea, and you are aware of which public sector R&D institute you want to work with, tell us. And if this leads to a direct decarbonization pathway, we'll be supporting you in funding this. Of course, we do ask for some form of skin in the game from the startup of the company as well. But when that happens, we'll leave all of the commercials to the startup as well as the R&D institute when it comes to things like IP sharing, tech transfer. And the whole goal here is really how do we partner companies with R&D institutes to then look at developing as well as commercializing R&D that makes it relevant, not just for Singapore, but for the world when it comes to decarbonization. The second phase is then, you always hear of the value of depth, and this is exactly what's being covered, right? Companies can do pilots, small scale R&D, but eventually they're not willing to pay. This is where, again, from a Singapore government perspective, we do want to address that because we're serious about abatement, right? And we do know that there's this whole value of depth where a lot of R&D is done, but there's no way for us to scale this up. We have set aside $250,000, so $250 million to be funding pilots that can be deployed in Singapore for the power as well as the industrial decarbonization space. We will fund up to 50% of your capital expenditure to support companies that really want to run their first or second pilots in Singapore. But the caveat here is that it has to lead to a pathway to abatement in Singapore. So really beyond cash, what we're supporting here as part of the government is three things. One, regulatory approvals. It's going to be easier for companies who are interested to run such pilots to be partnering directly with the government. We'll try to green lane some of the various approvals as well as clearances. Two, direct connections to the companies that we'll be partnering to scale this up. And three, of course, is the entire ecosystem that you have access to, including R&D institutes, including your EPC players, just to smoothen the whole process. So all in, really, the government in Singapore is really just trying to smoothen and facilitate the entire end-to-end journey from research and development of solutions all the way to the deployment as well as scale of solutions.
And having those corporate partners involved from an early stage, does that give you the opportunity to think about these sort of commercial attributes of the projects and assess them with consideration of that as well?
Yeah, we do want to take a more expansive view when it comes to this. Of course, when it comes to an earlier phase of R&D funding, the focus area is definitely really on how good the R&D is going to be, rather than more of a commercial perspective. And this is exactly why we do want to partner companies, right? Rather than, I mean, no offense to public sector research institutes, I think some of them are present today, but we do think that companies, once they have some skin in the game, can decide which are the R&D pathways that are more worth investing in. This gives us that sort of assurance that, hey, there are some leaks when it comes to that pathway to commercialization.
Sounds good. And clearly, we're not going to achieve this on our own in any sense, the decarbonisation of the economy or our own industries in particular. And this model of working with public and private sector collaboration is already working, is it, Freddie? And there's some live examples of that from some of your work.
Yeah, yeah. In Japan, there's been a project to try and develop the next generation technology for steel production. The project has been a collaboration between the government, NIDO, the Japanese steel industry, and also academia. And it's been operating since 2008. It's called Course 50. And the goal was to generate 30% steel reduction emissions, 30% reduction in steel emissions by 2030, by developing hydrogen injection into the blast furnace. And as I mentioned earlier, this project has put in place and built a test facility And since 2022, they have been carrying out this injection of hydrogen into the blast furnace. Back in 2022, they achieved 22% reduction. And today, they recently announced a 45% reduction in CO2 emissions by hydrogen injection to the blast furnace, which is, going beyond the target they initially set. There is a stretch goal, they call it Supercourse 50, to get to 50% reduction in CO2 emissions, and that is going ahead. The next stage of the project is to scale that into full-scale industrial implementation, and so our project was successful because it was bringing together those three entities. It was bringing the commercial mindset of the steel companies, really not just looking at it as a nice little R&D project, but really thinking about what that will mean to the industry. They've been focusing on decarbonization of existing assets. I think this is really important for heavy industry. There's a heck of a lot of capital tied up in existing infrastructure. And so to suddenly think that we're just going to, raise all of that to the ground and suddenly build all these shiny new facilities is completely unrealistic. And so by retrofitting, by changing the process of existing infrastructure, hopefully they'll be able to facilitate the decarbonization of heavy industry much faster and cheaper than would it otherwise be. So it's been a great collaboration project, and it's been very successful to date.
And that mindset of showing it as growth and renewal rather than it being a parallel investment or a sub cost or anything or anything that draws away from that opportunity to build. So, that's something we were discussing earlier, that mindset around thinking of this as furthering the industry rather than it being something that we have to do to address to just address the issue, but actually it being an opportunity for more.
Yeah, I think it's really good when you collaborate on that, and also to look at the specific site you are basically located. So when I look at Antwerp in Belgium at our plant, for example, in our neighborhood there is a waste to energy plant. So the question is, how can we bring that energy as steam to our production site, so that we are not reliant on gas at that site anymore? And there as well, the different companies, but also the public sector, which with the permits, etc., need to collaborate and make that possible, and also have that mindset how this transformation can be done together. And I also see a lot of potential, for example, in the data centers coming up, because they also have heat and energy they're using, but they also produce heat. So you can think what you can do with it, either do the heating for your houses or something, but then really have a look at the whole ecosystem and at your neighborhood in the end. So what helps there is to have an openness also for different technologies, and not to have a one size fits all approach. So for another site we have in Marl, our biggest production site, for example, there we had a coal-fired power plant, and we switched to a gas power plant there to produce electricity and steam, because steam is also very important for the process energy. And it's an intermediate step. It's not the carbon neutral solution yet, but it's more important to really go step by step and move forward than to design a perfect solutions without starting, because every CO2 which we don't emit today helps. And for example, the shift from coal to gas, we save 1 million of tons CO2 per year. So that is really making a difference at that. But it's not the perfect end solution. So really have the courage also to go step by step and create a path towards neutrality.
I think it's really interesting. Like, one of the things which is very clear if you look at the kind of different geopolitical approaches to climate mitigation is it very dependent on the type of longevity of different governments and the speed at which they change and the speed at which kind of different governments or different voting cycles come in. And actually, if you look at countries which have much longer cycles or longer term thinking, they're able to implement much broader approach climate solutions. So a great example of this is in China, they focused on they saw that there was a lot of strain on their healthcare system because of smog and because of unclean of air pollution. They also knew that they were emitting huge amounts of carbon emissions. So what they did is they tackled two birds with one stone by saying we're going to reforest. By doing this, we also create a great suction of carbon and bad pollution from the air. And this does two things. One, it reduces the emissions or balances out the emissions of which we're producing elsewhere, but also it reduces the healthcare strain because people are no longer impacted by the bad pollution in the air. And what it shows you is that if you can take sometimes a step back and look at these broader solutions which can have two applications or can be used in multiple different sectors, you can actually implement much quicker and much more effective solutions which help more broadly. And I think that this is something that broadly speaking, kind of Western governments can learn from, because we generally think quite in political cycles, like what can I achieve in 4 or 5 years that I'm in government for? And actually, a lot of the time, I think that collaboration between different parties would work better if we thought, well, what are the main strains on our society as a whole? You know, health, climate, like energy, whatever it is. And what would be a singular or a double solution which could tackle multiple points of this at once over 10, 15, 20 years so that each government can come in and actually work on that continuously rather than going, I've got to achieve something in 5 years. And if I haven't done it, then I'm a failure, or oh, we'll scrap it and move on to the next thing, which is what we see a lot. And it's very similar to your point about kind of, and your point about like new build things or like going for the perfect option. But sometimes actually it's good to kind of take that step back, think about what can be done today and what could last a long time to actually make a bigger impact quicker. And I think that's something we could learn from.
Absolutely, and that consideration around term of office maybe translates also to from prime minister to CEO as well, perhaps, and thinking about how we have that long term impact. But clearly, the the solution is around less of this linear process thinking and more into these integrated networks. But how do we to bring back some of the commercial considerations and also the policy signals, and perhaps the structures that we need to look for policymakers? How do we create a situation where that value is recognized between those different process streams, between those different value chains, so that we create these new value networks rather than value chains?
I'll say a few things. I mean, huge question, of course. And we touched on it a little bit earlier around who pays for this and how do we ensure that the investments that are being made by the emitters today are worthwhile? And the simple answer or the easy answer is saying, well, governments should pay. I mean, but that's not going to work. I mean, governments don't have the money today to put up billions of dollars of investment in decarbonizing every steel plant in Japan, for example. So surely the answer is we got to share it across the value chain. But to share it across the value chain, you need appetite, and ultimately that appetite comes from every part of that, both the manufacturers and the producers of the steel in the steel industry case need to have the appetite to actually invest, and they need to have the appetite to offtake and pay a premium for that product. And knowing what is good value in terms of premium is the crux of this problem, because if the premium is 5%, it's probably swallowable. If the premium is 20, 30, in some cases 50 to 70%, it's a totally different story. Um, and obviously, we also need to look at the timelines as well. When we're talking about premiums, often those premiums are at the highest at the start. And that is where government can come in. That is where government can help soften that initial hurdle to reduce the premium in the short term. And in the long term, those premiums will come down. Again, looking at the steel industry, the big reason that the green steel is going to cost more is because of the input feeds that we need. The hydrogen production is a lot more expensive than coking coal. And applying CCS is also a lot more expensive than just letting the CO2 going into the atmosphere. But over time, those technologies will improve and the cost will come down. So yes, we need to share the cost. We need government support to help help reduce the burden at the start, uh, and we need to make sure it's a collaborative approach to the cost impact of decarbonization of heavy industry.
Maybe building on that directly, I think we actually can learn a lot also from the chemical industry. There's even a German word which is used also in English. It's called Verbund. And it's about making use of the resources you have and also reducing the waste in the end you have and seeing in every waste the potential as a resource. So This is basically the idea to be very resource efficiency and to make something out of it. And this is an idea which is in that industry already for quite some long time, and also to work across the value chain with all the partners, and also work with the local governments who, because you need a facility where you do the production, but you also have in the chemical industries often the case that your customer is also your supplier. So you think in longer terms, and you always meet each other twice. So these are basically also characteristics which can help to foster an ecosystem, and where we can use the strengths what we see already in place, and leverage that also to other sectors, and also to the cross-sector collaboration.
I think finally, just to wrap up on this from my perspective, I think actually the need for kind of globalized collaboration is important here. Like, there's been a shift quite recently to more localized or reshored or kind of isolationist funding, and thinking about your region and where you are and what can we do for our space. And actually, I think that there's a cross-national approach here, which is actually more valuable sometimes. So in the same way that the EDB wants to come and kind of think about how it can work with institutions like globally that could then benefit Singapore later down the line, I think this is actually something which all countries should be doing more of, because in many cases, the resource that we have in the UK is very different from the resource in somewhere like Singapore or in China, or in any other country really. So I think, like, in many situations, actually, we'd benefit from solutions which come from other places, rather than always thinking about, well, we've got to design something within our own ecosystem that can solve our problems. Where, particularly when we're talking something like climate change or decarbonisation, which is a global problem and applies across the industry, regardless of whether you're doing steel production in the UK or steel production in Japan, you're still going to have the same issues. So actually, if we can think about where the best resource is and the best ideas are coming from, and then work cross collaboratively across those borders, I actually think we'll move much quicker. And we used to do it quite well, by the way, but we seem to have kind of backstepped a little bit on that. And I'd like to see more of it happening.
And I think that goes some way to that collective thinking goes some way to address some of the challenges that we've seen with things like CBAM, or recently with what that's done for offshoring of certain processes that and assemblies and so on. Then how could we use that collective thinking to address a problem together rather than moving forward. But I think coming back to the premium point for a moment, I think it does it 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 depends on how you think about value in the urbanization as well, right? You need to think of sustainability as an opportunity, and circularity principles, as you were saying, about using waste is the easiest route to demonstrating that value, because you're using less, you're spending less on materials and so on. But it's about, should we be asking businesses to pay that premium, or should we be taking that decision away and letting the policy framework to incentivize that investment in the right direction?
Can can I just give one good example of that and how the green premium is being tackled? In Europe, there's a very innovative project happening in Sweden to produce steel using hydrogen. Um, and this is a completely greenfield project. They are developing the steel production, the hydrogen production, everything in-house. They needed to raise billions of dollars of capital, and they also needed to find new customers. What they've done is they've targeted the automotive industry predominantly, and the automotive industry is a clever play because steel makes up, while a lot of the weight of the car, it's very little in terms of the total value of the final product. And what that means is that customers are actually willing, the OEMs that are making the cars are willing to pay a premium because they can sell their final product at a very marginal cost increase. And so there's a solution there where they are selling forward contracts to steel that's not even being produced, with a premium that helps fund the investment and the development of this new project. So it's a really good way of looking at it. Now, of course, that doesn't work everywhere. Steel in in some projects is in a huge percentage of the final project cost, 60, 70, 80%. So it's a different story. But it's great to see that there are examples where the green premium is being paid, and it's being paid, and there's value added to that, to the end user.
And Michelle, you're already using this collaboration opportunity to drive your climate ambitions in Singapore as well. So how's that working? Is that, is this an extension to your existing program of work that's already moving forward to deliver those ambitions, or where?
I mean, I did mention that Singapore is alternative energy disadvantaged. Like the UK, we have set ambitions to go net zero by 2050. We are peaking our emissions by 2028 in 3 years, in 2 to 2 years time, and it's going to be a pretty challenging and interesting journey for us to be decarbonizing. Hence, I was just sitting here musing at all of the comments. It's all music to my ears. Uh, while the Singapore government is prepared to support and fund things like green premiums, things like early pilots and all that. The emphasis here is that eventually the commercials have to work out, right? It's going to be difficult for governments to continue to fund this to perpetuity. There is indeed a need for private sector to be stepping in. What governments can do, and particularly I will comment from a Singapore perspective, is we want to be collaborative. We are able to then support some of the, if you present value some of all these funding support, we're happy to look at the early stage investments and some of the hurdles that is required to then look at what is a first of a kind pilot or what is a first of a kind deployment. But beyond that, we do need a collaborative approach from the private sector to make it happen.
And I think that from the panel, we've already got some of those examples. Thomas, you
No, I was just going to completely agree with that. Like last point is like, okay, a green premium maybe is the government could kind of help for a little while, but fundamentally, if that's going to be a long term thing, it won't work out at scale. Like it might work for part of the industry for sure, but I think we've seen time and time again across different solutions that if the continual product relies on the either need for subsidies or you're relying on the end user to pay more, it won't work. And we've seen this happen across multiple different examples. I mean, talking of Sweden, I mean, I'm surprised they went down that route given Northvolt's background. But I think that's a great example of where it doesn't work in Sweden. And I think that we've seen that where fundamentally the best projects in almost all cases startups start more expensive and sort of say by this point we'll hit price parity or by this point we'll be cheaper, and in almost all cases they actually never reach that point. So I think there needs to be some work to be done to try and validate that a little bit earlier more broadly with the private sector, because particularly from an investor perspective it's becoming harder to take that bet. And by the way, not necessarily because of our lack of appetite as the investor, but because our investors, as the LPs that invest into our fund, have lost capital over decades of trying to invest in stuff which claims to be able to get to this commercially viable product and doesn't. And see, we talked briefly about CCUS earlier on the panel, and I think that that's an industry which is quite a big taboo in venture capital right now, mainly because over the last 10 years, no one has made any money off of it. And I think you're starting to see more usage rather than storage, which makes it more interesting. But even then, we still need to see the true economic argument that this will bring returns to our LPs at some point. It's just the difficult game of venture capital is that, we're there to be risk takers, but we're also quite risk averse.
and how would you ask a company to demonstrate that credibility to you?
Yeah, I think it's incredibly difficult. I think the fundamental shift happens from kind of doing, let's talk about manufacturing of kind of anything, like from batch production up to continuous production. And if you're able to show a meaningful shift in the cost of your outputted product or the cost to produce it, then you can start to see a sort of like line which could go down as that scales up. If it's a very insignificant shift in the price, then it's very hard for us to believe that with more scale it's going to get cheaper. Like it just it doesn't make much sense to the investor. And of course there's arguments, well, if you bulk buy more feedstock it's going to, but realistically you need to start seeing that in quite big shifts below each stage to really believe that you're going to go from a premium product to something which also is not just price parity but has to be cheaper, because you're also asking them a lot of the time to change the way they do things. A great, very small example of this is when I was at Greenpeace. I had a friend who was working on a campaign, and they were talking to a very large toilet roll manufacturer, which I won't name, and they tried to get them to change from plastic wrapping to cardboard wrapping. Now, in principle, it sounded very sensible. It actually wasn't that much of an extended cost, but this toilet roll manufacturer had been around for so many decades and had such a nuanced and curated supply chain of how they did that actually this would have huge impact across their value chain and the supply chain that they'd built over decades of building their huge company, that actually it made very little sense for them to do it regardless of the economic argument. So actually what you find is that you're not just looking for something to be cheaper, but it needs to be extremely compelling from an effort perspective, as well as the price being not just the same as it was, because otherwise, what's the point?
And the risk of
Indeed.
of making the change and relying on a new
Particularly with
supply.
startups, right? Like what you're asking a lot of the time is for big corporates to bet on this brand new company, it's sort of less than 5 years old, to basically take over and change the way you do things. When statistically almost all startups fail. So, you're basically saying, yes, I'm going to change everything. And then if you fail, I change again. Like it's a hard bet, right? So I think that's why you see step by step change. It starts like, through pilots, through those commercial contracts. That's why that exists. That's why that process exists. But I think that we need more of that collaboration between, the private sector and government to work out where those subsidies make sense, but also for how long. Because if it's a long term thing, it's going to be very hard to continually get that support to get to a scalable commercial product.
So I'm just watching the time tick down, and want to give you all a chance to close out and share some final thoughts. Um, but there's been some clear messages in there around the commercialization technologies needing to show that business case and maybe not to rely so heavily on the support of policy, um, certainly local policy, to make the case for us, and needing to do that for ourselves. But if I can invite each of you to maybe, if we start with you, Freddie, just on your closing thoughts, what's the one thing that we need to do in the next 1 to 2 years to really unlock this shift, and drive some progress in industrial decarb?
One thing is always a hard answer. Um,
Come on, the one thing that's going to save the world, man. That's it.
I think that the simple thing that needs to happen is the shift from R&D to scale, and I think that is being done right now in Japan, and that is incredibly exciting. The technology is and has been proven, and now it's about scaling. And I think, sorry, I'm saying two things now. And I touched on it earlier. I think the most important thing is to not rip everything up and start again. I think we have to continue to improve incrementally the existing infrastructure that we already have. I think we cannot take an idealistic look at this. We cannot say everything has to be perfect from tomorrow. We need to do this incrementally towards 2050, and that's the most realistic transition, unfortunately.
So I would say go out and find allies for the journey you want to embark on.
It can't be done alone, right?
Yeah.
Um, I think focus on the bottom line of the clients that you're going to be serving and ultimately your bottom line as well. I think that think about that from as early as before the idea, and you're going to be onto a better solution that can scale more easily. And if I could be so cheeky to put a second thing, I think that venture capital investors need to be willing to take more risk and invest in riskier things as well.
Right. So we've got incremental progress together, and with that real clear commercial lens. Michelle, what do you think? How's that done?
Yeah, I'm going to be biased. Decarbonization to me is a wicked problem, but it's also a lonely one. And I say I'm biased in that Singapore is a very welcoming country. So the one thing you can do is partner Singapore, right? This is the right time, it's the right location, and it's the right opportunity for you to be tapping the resources that are available. There's a willingness from companies to be partnering because there's a need to do so, and it's a very enabling environment as well as government to support your decarbonization needs.
Amazing. Well, thank you very much, everybody, for your time today. It's been a great discussion, and thank you all for staying and listening. We're gonna stick around for a few more minutes to take a look at other questions that you've got, but otherwise we'll wrap up there. Thanks to our panelists.
Thank
Thank
you,
you very
everyone.
much.
Thank you.